Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
Welcome back to the Gentle Art of Crushing It podcast. My name is Randy Smith, and I'm going to be your host today. And excited to have a friend with us, Michael Wagman, today. Michael is a co-founder of Nimble Capital. They focus on multifamily development and retail projects. He's also the host of the Beyond the Deal podcast, which is just a really great podcast. They have great guests, myself included. And then finally, he is teaching other folks how to raise capital more efficiently. And something kind of personal and exciting about him is he was a digital nomad for over a year and just getting back home in the last couple of months. So Michael, welcome to the show.
Thanks so much for having me. What an intro. I'm honored to be here.
Yeah, well, what a background. Like people say, what an intro, but it is like you've done some amazing things. And for the folks that are watching on YouTube, they'll see like you're much younger than I am. So you've accomplished some stuff and you like guitars as well. So very good. Well, let's jump in. Can you tell the audience maybe your perspective on where we're at in the cycle and how you think that could be impacting the passive investors today?
I think we're at a very interesting place in the market cycle. And the reason for that is because for a lot of the last 2 years, everybody was kind of waiting for the shoe to drop about when are the deals going to come back? When are the deals going to come back? But, sellers weren't lowering their prices. People weren't quite as distressed as we thought they were going to be when all those COVID loans started coming due. But it's happening now a little bit more. I'm really starting to see a flood of actual opportunities, sellers being distressed and selling for sometimes, at a loss. And the deals are back, but the appetite from passive investors for multifamily particular is not there. So while, there may be a fantastic opportunity, if you had to say, I need to go raise $10 million in 5 months, or 3 months, it's a much more daunting prospect than it used to be just because of how many people who've gotten burned, I would say, in the last 2 years. And just, what's the hot button issue right now? What are people raising money for? And I think the multifamily maybe heyday has come and passed a little bit. But if you tell someone you're raising money to buy a business right now, they're going to be all ears.
Yeah. Isn't it? It's so funny. I couldn't agree with you more. Now is the time to be deploying capital in the multifamily space. As we all know, like deliveries are going to start falling off the chart. And all of a sudden, there's this huge opportunity. We're starting to see things trade, and passive investors are not eager to be writing checks today, which is completely the opposite of probably what we should be seeing at this point. I think it's going to be an interesting handful of months or year or 2 years as we see this trend kind of continue. So yeah, thank you for sharing that perspective. Well, maybe Michael, if we could, can we back up a little bit and can you tell the audience a little bit more about yourself? We got the high level intro, but yeah, tell us about your journey and how you found yourself to where you are today.
Sure. So short version is I moved abroad. After college, I graduated with my shiny 4-year degree, and I thought, people will be eager to hire me. And it turns out they were not, because I did not have any real world experience whatsoever. So I just moved abroad, and I guess, travel is kind of a consistent theme in my life. I tend to move around. But I lived in Tel Aviv, where I worked in the high-tech industry there for 4 years. I pretty quickly found myself in a sales role due to my ability to speak English and sell over the telephone. And I was making pretty good money as a very young 20-something, living in a foreign country, just enjoying the lifestyle. But I only lasted about 3 years in the corporate world before I just said, I can't let other people tell me what to do. And I don't know if that's a me problem or whatever. I tend to think I have better ideas than the people around me. And I was really struggling, with my bosses and people just telling me what to do. And I felt like they were making my life harder. So I moved back to the US. I took all the money I'd saved up and I bought a house in pretty close to Daytona Beach, Florida, because that's where you can buy a house for about $66,000.
Got it.
Which is what I paid for my first house. And I flipped it. And so, I made a little money on that first flip, and that kind of started me down the real estate journey. And I just, that was about 7, 8 years ago now, and I've just stuck with it ever since.
Unbelievable. So
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
So $66,000 purchase in Florida. That's amazing. Even 6 or 7 or 8 years ago, you could buy a house for 66 grand in that area. Well, I'm curious. Actually, let's not just breeze over the Tel Aviv thing. Like that's one. I would say it's a major accomplishment to be able to move overseas right after college and take that leap. Not all college graduates are comfortable taking that kind of leap. So, can you walk us through kind of the mindset then? You mentioned that you thought you were going to be able to get a good job right away, but that maybe didn't happen as fast as you wanted. So tell me about that time period, if you can, just a little bit.
Sure. I mean, I graduated college because I followed this traditional path. You know, they tell you, okay, do high school, you go to college, you get a degree, and then there will just be money and jobs waiting for you after it. And I learned the hard way that that was not the case. And, you know, I graduated college in 2013. So it was a little bit post 2008, but I would say the economy was recovering a little bit. But that really at the time, the issue that I found was my options were take an unpaid internship with no guarantee of a job afterwards, or just keep applying and keep applying. But, you know, I was probably applying to jobs for the better part of 6 months, multiple times every day, submitting applications. I couldn't even get hired as a waiter because I didn't have previous waiting experience.
Sure,
At some point, I was just like, you know, why am I wasting my time here? I had
sure.
some friends and family in Israel, and I just said, I'm going to go there and just make it work. And
Yeah,
so that's what I did.
that's amazing. And what part of the country were you in? Were you in Arizona at the time or
No, I was living in California at the time. So born and raised in California,
California? Where'd you go to school?
UC Santa Barbara.
No kidding. Okay, so great school, great market, and that's incredible that you weren't able to find a job afterwards.
Nope.
So you take the plunge, you move to Tel Aviv, and now you're in the job hunt in a different country. I would imagine there's a lot of different challenges that come up being in a different country trying to find a job. What did that look like?
So yes and no. You know, I think a lot of people's entry to sales jobs tend to be kind of through these sort of, I don't want to use the word scammy, but maybe on the seedier side, like we'll hire anyone and we'll train you kind of things. And that's pretty
Sure,
quickly what I found myself in, which
got it.
was in the Forex industry. So are you
Okay,
familiar with the Forex industry? Yeah.
I am. Yeah,
It was like 60 of us in this big sales floor with, you know, all on auto dialers making hundreds of dials a day. And the training for it was like literally like Wolf of Wall Street, just like run through
sure.
the pitch, get them from point A to point B and, you know, do whatever you need to do. But it was unbelievable sales training because you'd have your team leader who could actually listen in on your calls and he would mute you and be like, say this now. Right. And
Yeah,
so
yeah, yeah.
we really got like, you know, excellent sales training through that. But I only lasted the role about 6 months because I could feel it eroding my soul. You know, these were people who,
Sure.
it's not exactly a scam, but it might as well be gambling. It's pretty much the next closest thing to gambling. So I didn't like what I was doing, but I took the skills that I learned there and I moved it legit into high tech and B2B sales.
Love it. Love it. Yeah. No, I started in a similar role. I remember I moved to LA after leaving college and I got a job making $24,000 a year salary. And I thought I had struck it rich. And it was an inbound phone sales role in computer sales. And it was the same thing. Like it was those companies that would dump like 3 million catalogs and mail them out all over the whole country. Sometimes you're getting 8 or 10 of those at the time, and then the phones would just light up and people would be running up and down screaming, get on the phones. And same thing, managers listening in saying, say this, sell this, do this, like super, super intense. So yeah, you're bringing me back like a lifetime ago hearing those stories. But so you transitioned over to like a true B2B SaaS role. Was this, obviously it's an international company and you're speaking English. So who was the customer then? What were you selling? What did that look like?
So the product was a repricing tool for Amazon. So this is kind of it. So our customer was people who sell things on Amazon. And if you're familiar with Amazon at all, there's probably 10 to 20 given people selling the exact same product at the same time on
Sure.
Amazon. And
Sure.
the way that, if I go search for, I don't know, call it, headphone case or something on Amazon, how does my product get shown compared to the other sellers? And one of those factors is price. So we had a tool that would change your price by like cents, 5 cents,
Interesting.
10 cents every 30 seconds to make it more likely that you'd get shown more often. Yeah. So often our clients were in the US, particularly in the UK too.
Interesting. So you're dealing with entrepreneurs though. You're not dealing with large corporate America, Fortune 100, Fortune 200 companies. You're dealing with folks that are kind of in the trenches, trying to build a business from the ground up. I worked with a lot of those folks in my days at American Express because they were using our cards to pay for a lot of the materials that they were reselling or the advertising or whatever that was. Interesting. Yeah, it's an interesting experience to be selling to the entrepreneur as a sales guy because you get to get in the mind of that entrepreneur and see what kind of drives them, what kind of challenges they have. And I suspect at some point along that journey, you started thinking, I can go down this path in corporate, which all the guys in the suits and the ties are over here, or maybe I go chase this entrepreneur thing, which are the people I'm selling to every single day. So was there some aha moment at some point that kind of shifted your direction or?
So Tel Aviv in particular is known as the startup nation. There's like more startups per capita. It's like throw a rock, hit a startup in Tel Aviv, right? And so what everyone does there, particularly in the sales cycle or for sales guys, is you work at a company for 1 or 2 years, and then you jump to the next company, you try and increase your base salary. You jump to the next company, you try and increase your base salary, and so you incrementally you're hopping around a lot, right? Because that's how you make more money.
Okay.
And often.
Yep.
Is the case with startups. They don't always succeed. So what happened in my case was after about 2-3 years at that company, the product stopped working as well. And they were in hyper growth mode. So I was the 50th employee. And by the time I left, they had about 250 employees. And so in order to continue showing growth to the investors and to get more funding, they would have us start selling products that didn't exist yet. The product team would be like, it'll take us a year to develop that. And it might not look like you want it to, but the executives are like, start selling this product that we don't even have yet and start pre-selling. And I was just like, they're setting our targets higher and higher, and they're making it harder and harder and harder for us to do our job. And they're putting in place more, as the nature of things goes, moving from sort of a startup to a more corporate structure, you have to tighten the wrench everywhere you can. And so I was just making a decision about, am I going to leave this company and jump to another company, try and increase my salary, work there for another 2 years, or do I take this little pile of cash that I made and go try and build something with it? And so that's when I decided to move back to the US.
And so was the plan then to come back and do real estate, or was the plan to come back and get another W-2? Yeah. What did that look like?
So the issue was at the time, I was watching too much HGTV. It's just what I was doing. And it was during the peak of, the Flipper Flop and the Fixer Upper and all of those shows that were so popular. And I guess they probably still are. I don't know who even has cable anymore, but I was watching too much HGTV at the time. And I just thought I can flip a house better than these people can. Look at those choices they're making. I could do that. It'd be so easy. Look how much money they're making.
Right.
And lo and behold, the reality is very, very different. But I'm grateful that I chose to go down that path regardless.
Yeah, no, my wife and I are guilty of the exact same thing. Remember the first house that we bought in Atlanta? It was a full gut rehab, and this was literally the most beautiful house within miles by the time we were done with it, to throw somebody renting it for like $1,100 a month who completely trashed it in the first 3 months that they were in there.
Of course.
But yeah, those HGTV, all those episodes taught us that we should put stainless steel appliances and granite countertops and all of that. We just missed the part where you shouldn't over renovate the units. Very good. Very good.
Well,
okay,
so
at
the time, Sorry, at the time, I had never even heard of raising capital or using other people's money or even rental property. I didn't really think about renting it as an option by the time I was done with it. I just thought I have to
Sure.
flip this, sell it. And I used all my own capital on the down payment, and I couldn't even afford a contractor. So me and a handyman who I paid by the hour were doing everything ourselves, and I made a little bit of money on the sale. I think I made $13,000 after 6 months, like all said and done, before short-term capital gains or anything like that. So flipping as a
Right.
business model, I didn't know what I didn't know at the time, but lo and behold, I stuck with it, and I learned about, burr investing and refi and all this kind of stuff later, and how to actually raise capital and get money from private lenders. And if I would have just hung on to that first house and done a refi on it, oh my gosh, I would have done so well in the long run, like so much better. It was a perfect rental
Yeah.
too. It was a 2-1,
That's
People don't really want to buy 2-1s, but they definitely want to rent them.
Yeah. Yeah. Awesome. So did you do another flip after that, or did you
Yeah.
jump into
Oh, I
bigger
did a
things?
bunch.
You
I
did
did a
what?
bunch. I kept flipping. I made the same mistake with my second one though. I still hadn't wisened up to raising capital or scale or anything like that. So I took all the money that I made on the first one, put it immediately into the second one. And I think all said and done, I probably made about 40 grand profit my first year, which is like, less than a regular job at the time, but I was my own boss, and it was enough to sort of keep me going. And then I started focusing on education and trying to find mentorships and coaches and read, Bigger Pockets and the podcast and all that kind of stuff. And so, yeah, it was just going down the real estate journey. I did pretty much every sort of residential type of investing you can imagine. I did wholesaling. I was a realtor. My first aha moment into becoming a landlord was actually through house hacking. So I bought a 4 unit and I lived in one of the units, and then I renovated all the others and rented them out. And then I was like, holy crap, I have passive income. I need more of this. And so I bought
Yeah.
more
Yeah.
duplexes, and yeah, just, kind of went down that journey that ultimately led to true multifamily commercial syndication.
Yeah, I love. So you used kind of a combination of Burr with house hacking, which can be a really powerful, active strategy to build, a pretty modest portfolio relatively quickly, especially if you're doing a lot of the work yourself as well. So take us fast forward maybe to where you guys are today. Like it's been a number of years since then, but you have built a really impressive portfolio today, and you're doing much, much bigger things. So what does the current portfolio look like, and what do the current projects look
Okay. The current portfolio is rapidly approaching about $100 million in active under management. We're in 4 states: Arizona, New Mexico, Texas, and Oklahoma. We are buying traditional value add multifamily, typically between 50 and up to 300 units, depending on the deal. There's really a lot of benefits at scale there. I think our smallest property is 20 units, but we have 200 units, so goes all over the place. But in the last couple of years, we've also sort of broadened our horizons. So the name of the company is Nimble Capital Group, and we do try to stay nimble to whatever extent we can. We are opportunistic, and maybe sometimes we like to jump on things and just fearlessly get in over our heads a little bit. But we have 2 ground up developments that are in the works right now. We have a commercial retail redevelopment, and we also have a land fund that we are just paying out straight debt returns on that as well.
Interesting. Yeah, I was aware of most of those projects, but the land fund, that's something new. Tell us a little bit more about that.
Oh, well, you are familiar with this. So we are partnered with Aaron Shoemaker on the Land X Fund.
Very good. Yes, so I am familiar. Okay, very good. Yes. Okay, good. Fantastic. So what's the team look like? Is it just you and your partner, or do you have other employees as well?
It's pretty small operation, so it's just me and my business partner, whose name is also Mike, just to keep things confusing.
Mike and Mike? Sure.
Yeah, Mike and Mike show. And, we do this because we don't really want to be some organization that has a bunch of payroll and employees and, all that kind of stuff. I mean, at the end of the day, he's got his wife and his 2 daughters and his 2 dogs, and he wants to spend as much time with them as possible. And I have my girlfriend, we go traveling around, right? So we're in this truly for the lifestyle, and we like to practice what we preach about passive income and a lifestyle of freedom. So yeah, I have one assistant who is based in the Philippines, and she does basically a lot of my sales development work, a lot of the cold calling that I don't do anymore. And that's it.
I love it. So you guys have been able to, and actually, I believe your partner, he left his W-2 not too many years ago either, right? So he stepped away 2 or 3 years ago. How long ago was that?
Well, so he was actually furloughed in 2019 and 2020 when, all the COVID stuff was happening. And he turned to his wife and said, give me a year to figure out this real estate thing. And, that was almost 5 years ago now. So
Amazing.
it worked.
Yeah. So in 5 years, you guys have been able to accumulate almost $100 million in assets under management, and you were able to step away and spend almost an entire year abroad.
Yes.
How do you do that? Like there's so many people that are trying to figure out how to do their first flip or their first house hack or something like that, and you go kind of like 180 degrees, and you've got 100 million in AUM, and you left the country for a year. So talk about that. Like that's something that had to be an amazing experience. So yeah, tell us about that journey if you can.
So it all boils down to specialization at the end of the day. And what I mean by that is I want to be good at one thing and one thing only. And everything else, I would rather farm out to third party or my business partner or whoever to take it off my plate so that I can just focus on that one thing. And for me, that thing is raising capital, right? So I'm not managing the assets, nor do I particularly want to be managing the assets, right? That's all Mike. He does all the underwriting, the broker relationships, the asset management. My job is to focus on getting leads into our system and then raising capital. And that's pretty much all I do. And this is something that I took from working in high tech, because when I first started at the B2B SaaS company, I was a sales development representative. So my job was to make 100, 150 calls a day, qualify the leads in our system from the marketing, and then set qualified appointments for the person above me, or the AE, account executive at the time. And then ultimately I worked at that company long enough to become an account executive and actually be the deal closer. So I just basically copy pasted that onto what I'm doing now by having my VA in the Philippines act as my SDR. She makes as many calls as she can per day. We have a script that I wrote for her that I taught her. Because I don't want her to know every in and out of how syndication works or multifamily works. That's not her job. Her job is to do one thing, and it's to qualify the lead and set an appointment in my calendar. So over the years, she's gotten better and she's picked up a lot of things. But really, at the end of the day, her job is to get through the script from point A to point B, where you have a fully qualified lead, setting an appointment in my calendar. And so as for the travel thing, what that did is it allowed me to create a system where basically every day I wake up and my calendar is filled with qualified investor calls. So by the time they speak to me, I know how much they're looking to invest, when they're looking to invest it by, if they're an accredited investor, what they're looking to invest in. I should have all of that data in front of me. And then I have a pre-booked appointment in my calendar. And so I go in, fully loaded. And my job is to have a good call and get them to the point of actually investing in my deal. So through that, I was able to just sort of pick up and leave and take my operation anywhere as long as I had internet connection, really.
Sure. And so you're doing Zoom calls or phone calls or a combination of the two, or?
Yeah, mostly phone calls at first, and then Zoom calls when things get a little more significant. If people want to be walked through a deck, I often find that at the end of a call, they say, sure, send me the deck. And then you send the deck and nobody ever looks at it. So it makes a lot more sense to actually get them on a Zoom and be like, hey, this is how you do this, right?
Yeah. That's amazing. So by setting up systems and processes, and having a really good assistant, you're essentially able to be anywhere in the world so long as you have internet. And if you can adjust your hours to where you've got, 4 or 5 hours that align with business hours in the US in any given day, then you essentially have the flexibility to go and do anything you like outside of those other 20 hours, I'm guessing. Interesting. Okay. So now when you left, Mike 1 and Mike 2. Mike 2 is back here in the States and he's the feet on the street. He's out chasing around these deals. What did the interaction between you two look like? Was it still you're booking these, or you're getting these booked appointments, you're getting investors excited to invest, and then you and Mike are connected on a weekly basis or something to talk about the projects and what's going on? Or was there a lot more collaboration there?
It's funny because even though Mike and I live in the same city, he lives like way down in South Chandler and I'm up in North Phoenix. So like we're
Sure.
almost an hour apart regardless.
Sure.
So it's, even though we're in the same city, we might actually see each other in person on, a couple times on a monthly basis, maybe for whatever reason. So it really didn't actually change things too much. Both of us had essentially, it wasn't remote work, but it was at home office work for the better part of the 3 years prior to me leaving. So it didn't really change things that much. I will say when I got into Asia, that was tough.
Okay.
When I got into Asia, we're talking about a 15-hour time difference between, it was really, really tough to do that.
I'm sure. So you're having to make phone calls in the middle of the night or take phone calls in the middle of the night. But but I got to think though, having a year-long experience where you got to do that, what an amazing opportunity that I'm sure you'll never forget. And you're so glad that you did. So not really being able to do something like that in a traditional corporate America job, it's amazing. The gift that you were able to take advantage of that because of commercial real estate. That's fantastic.
Well, I'll tell you something pretty interesting that has happened since though. And because of my travel experience, I got very used to going to co-working spaces, just where a lot of people get together and they're all working on whatever they're doing. And I actually got tremendous value out of being around other people who were being productive compared to being at home by myself. And so since coming back to the US, Mike and I have actually decided, hey, let's get an office. So we found a really cool co-working space in a high-rise downtown, and we got an office together there. And we try to make sure that we actually have physical proximity to each other 2 to 3 times a week now. And we meet in the middle downtown, and it works out great because I think there's really something special about going to a place, and in that place, work happens, right? Because if you can see my background behind me right now, I got all sorts of shiny toys I'd rather be playing with than working, right?
Sure, absolutely. No, that's interesting. That's a neat perspective that you brought back from it as well. That probably adds value to what you're doing today, or no doubt it adds value to what you're doing today. So what does the future look like for Nimble Capital and what you're doing?
Well, we are heavily focusing on development. So, I think at some point, Mike from his background, he came from a construction management background. So he was always around developers and working on huge construction projects. And I think that's kind of always been in the grander dream for him. And so that's the route that we're going down. It is a very different business model. It is a much higher risk, higher reward business model. It is a longer time frame, shorter time frame. You never know what you're going to get, but it is certainly exciting. We're really like changing the imprint of the earth. We're building a 176 unit property where before there used to be a piece of dirt. And it's just absolutely the coolest thing. And, our investors and ourselves should make a lot of money doing it. So we are going all in on that for the future. We have 3 in the works at this time. And once we get these out of the ground, we'll do probably a lot more. And then, we really will stay. At the end of the day, we are asset managers, multifamily operators. So a lot of developers are not operators. A lot of developers are build it and get out and then go build another one. But we're trying to flip this on its head a little bit and find a way to build it, keep the property, maintain it for a long time, pay cash flow, refinance, pull money out, create infinite return for ourselves, our investors. Everybody gets all their capital back and just keep doing that.
So a lot of our audience is really familiar with multifamily value add. We talk a lot about that. General projected returns, double your money in 5 years. You get a little bit of cash flow throughout with some depreciation benefit. At a high level, I don't know if you guys are in B or C's, but what does a general development deal look like? You said higher risk, higher return. So what does that look like ballpark around return structures?
Ballpark would be, and it is 506C, so I am free to talk about it. By the way. Ballpark would be, we're projecting it over a 2x, so a 2.2, 2.3x within less than 3 years. Like a 36-month turnaround and exit. So that's build it. It takes about 2 years to really build the thing, right? So 6 months on horizontals, 18 months on verticals, and then you've got a year for lease up and exit. And we should be able to more than double your money in that time period compared to 5 year time frame with a traditional value add. But on the traditional value add, you do get that tax benefit immediately, and you do get cash flow, although certainly these days it's not like what it used to be, but you do get sort of the trifecta of you get your equity appreciation, your cash flow, and your tax depreciation with the traditional value add. This is, you're not going to get any cash flow the first 2 years. There's quite literally nothing there. You might get some cash flow in 3 years, but our goal would be to actually exit as soon as possible. And we can't do the cost seg study until we get our certificate of occupancy. So that's probably in year 2, right?
Okay, so then with that, you mentioned infinite hold, and yet you're referencing a 2 to 3 year period. So
that's what Mike and I are trying to do now, and we're trying to find ways to flip the script here a little bit. We believe that we can do a refi at the end of construction completion. So that would essentially cut a year off of a capital event, in which case we could return probably at least 50% of the investor capital with zero dilution of equity. So we've created 50% value within 2 years. And then whatever capital remains in the deal, we would be able to cash flow on probably somewhere in the range of about 12%, which is huge.
Yeah, so I'm hearing more and more about the infinite hold. And when I first got into the space, I was very much like everybody else. I want to flip my money and stack it as fast as I can. And as I get to be a little more sophisticated in the space, I realize I want longer term hold. I need cash flow. We all need cash flow, right? I had this idea as a high income W-2 sales guy that I didn't need the cash flow because I was making great money in corporate America. And that all changes when you get laid off or you get furloughed or what have you. When you talk about infinite hold, I'm curious your thoughts about that. Is it truly infinite, or in this type of situation, is it really a hold until you need to do a value add again, maybe at year 10 or 12 or 15? Or what is the actual exit on these as you're thinking about this? And I know it's probably early stage, so maybe you don't know all the details, but at a high level, we're not holding these things for 100 years. We're going to sell them at some point, right?
Sure.
So curious your thoughts on that.
Well, so it's interesting because when I talk to a lot of investors and you say a 5-year time frame, 5 years is kind of almost hard to wrap your mind around. Like, where am I going to be in 5 years? What's my life going to look like? Is it going to be the same? Is it going to be different? It's a lot of time. But in the grander scheme of real estate, it's really not that much time. No. And so if you could turn that into 10 years just by itself, you're probably going to have just the likelihood of it becoming a slam dunk the longer you hold it it's just gonna happen, right? As you play the market cycle, you'll go through multiple dips and all these sorts of things in that time period. But if you just hold it long enough, just beating inflation a little bit, right? You're going to do fantastic in the long run. And then you have so many options. The cash flow only gets better with time as your basis is lower. And if you need to pull out cash, if you need cash for whatever reason, you do a refi. At some point, you have recouped 100% of your initial capital. So you're in the deal with no money and you're still cash flowing based on the equity that you have. And that's the infinite return factor. So once you hit the infinite return factor, it almost doesn't matter. Like, if you want to sell at some point, sure, go sell it. If you want to not sell it, just keep refining whenever you want to pull money out.
And that creates this opportunity where if you're truly getting 10 or 12% return and you still have ownership, do you want to sell it? And then you've got to go deploy that capital again and try to find another asset that you're going to be able to do that. Or do you just want to hold this thing until, another 10 years to pass? So yeah, really
the capital gain.
Yeah, exactly. So, well, yeah, really interesting conversation, Michael. We spent a little bit more time kind of on the early origin part, but I think it's neat to dig into the story. You've got an amazing story, hearing how right after college, personally, I didn't have the guts to pick up and go move across the ocean. So kudos to you for doing that. And I think the skills you gained and the experience you brought back certainly put you in a position where I don't think you'd be where you are today had you not taken those risks early on. So kudos to you. That's an amazing story.
Thanks. I appreciate it. I do get asked that quite a bit about, why did you do it? Both my parents are entrepreneurs. I don't know if that like it's in my blood or not, but I've just never been scared of the maybe when I was young I was too stubborn to think about the possibility of failure, but
Sure.
I'll take the first step without thinking about what lies after it, right? So that's how I got out.
Yeah, and probably a big reason how you got into the big, huge projects that you guys are doing today. If you knew
Absolutely.
all of the issues you were going to run into, would you have jumped into it, right?
100% agree with that. Yes.
That's great. That's great. Well, hey, we've got a little long here today, but it was a great story. Would still like to get into the final five if you've got a few minutes more to spend with us.
Yeah, absolutely.
Well, let's jump in. So, as you know, this podcast is geared towards the newer passive investors. So, is there an educational resource that you would share with newer investors so they can learn more about all the things that you're doing or all the things that we're doing in this space just to continue their education process?
Yes. I mean, you cannot go wrong with Bigger Pockets. And, I have to give credit where credit's due. It is such a tremendous resource for newer investors for every different kind of real estate investing. You name it, they've done it on a topic at least once. They've written a book about it. There's probably
Right.
10 plus podcast episodes about it. So I can't validate that enough as probably a huge part of the reason I am where I am, just religiously listening to the podcast back in the day. And obviously, it's gone through a lot of iterations, a lot of different hosts now, but they're always kind of up to date and bringing on interesting people. And then, yeah, from a coaching perspective, I would say that if you want to learn how to do this, go get a mentor. Whether it's you, Randy, or me, or whoever, join a mentorship group, do something. It makes all the difference to be plugged into a network of people who are actually doing what you want to be doing.
Absolutely. Find people that are doing what you want to do and go do what they did. And you'll get what they got. So, yeah, very good. All right. Is there a favorite book or a podcast you're listening to today? I think Bigger Pockets is a great place to start, but obviously you got to dig in deeper. So, what are you listening to? What are you liking today? And it doesn't have to be real estate related even.
So most of the podcasts I listen, I'm a big sort of health and wellness person, and I'm always kind of on the cusp of trying to optimize my life and change all these kind of different little things. So I'm really big into the Huberman Lab podcast, Modern Wisdom, Diary of a CEO. These are all really good podcasts with really interesting guests. And as far as there is a book I really have enjoyed the last couple of years called 10x is greater than 2x by Dr. Ben Hardy, really just about how to eliminate a lot of the crap from your life that you don't need to be doing. That's probably in order to 10x your life, it's actually easier than trying to 2x it because you're doing significantly less things. So,
And
I
I'm sure
really
you've read the Who Not How book by the same author.
yeah.
That ties very close to that. Very good. Yeah. No. One of my favorites. Like every book that he has done with his partner Dan Sullivan on those books have been just unbelievable. So very good. All right. So we talk a lot about due diligence. So is there a due diligence question that passive investors should be asking that maybe it's not one of those top easy ones, like tell me about your track record or how many deals have you done? Like what are some good deeper due diligence questions or what?
You know, I think, and it's funny because I was actually just in the opposite position so I had to do my due diligence on somebody else because we were presented with an opportunity that just felt like it was too good to be true, and it was just like almost hard to swallow. And so it really actually got me back in the mind of my investors of like, okay, this is somebody I just met who I'm talking to on the phone who says they're going to double my money in 5 years, right? How do I verify any of this, right? It's really is a kind of a leap of faith on their part. You need to work hard to develop trust. But what's the best way to get trust in anything? It's actually through referrals, right? So if your buddy says, "Hey, I'm investing with Michael," you're so much more likely to invest with Michael. So I think that asking for referrals is the number one thing that investors should do. And we ended up asking this particular potential partner for a referral of people who'd worked with them before. And it was one of the smartest things we did because we had a fantastic conversation and we met another amazing potential business partner through the process of asking for a referral. So for any of our investors, who are looking for that, we always have the list ready. We said, here's, 4 people who we've spoken to already about it. And they know that sometimes they might get a call from our investors just asking to verify that everything works the way we say it works.
Perfect. Great advice. I can't agree more. Getting referred to an operator by somebody who's already been investing with them. I personally, I don't like to ask the operators for referrals because I know that I can give you my 5 best investors that are going to only say nice things about me. But when you find somebody organically that's invested with somebody, I think that's the best possible way to dig into that. So, okay, final 2 questions here. Kind of fun, a little bit off topic, but we are both involved with a community where we talk a lot about bucket list items. So can you share a recent bucket list item that you've checked off your list or one you're hoping to in the near future?
Oh my gosh. Well, for me, I went to 19 countries in 12 months. So there's a lot of bucket list items, a lot of things that I did that I never thought I would get to do. But a huge one of those for me was going to Japan. I'd been studying Japanese for a whole year prior to going. So I thought I'd be, just ready by the time I got there. And it really surprised me in a lot of ways. So much of exactly what I expected and so much not at all what I expected.
Sure.
So yeah, going to Japan.
And so were you able to have conversations with people while you were in Japan?
To a small degree, yeah.
Yeah.
I'm one of those annoying people. I speak 4 languages pretty well at this point, so I have kind of a proficiency. Yeah.
Okay.
And so yeah, I was trying. And that's another thing about not being scared to take the first leap. In order to be good at something, you have to be willing to suck at it first. And learning a new language is one of those things that people get really hung up on because they're not willing to look stupid. They're not willing to suck at speaking the language or having a poor accent or whatever. And so that really is just the hindrance of getting good at something. So I'm not scared at sucking at something. In fact, I know that I have to suck first in order to get better. So I was speaking Japanese to Japanese people, probably messing things up, but wherever I could, I was trying to understand it and just go for it.
Yeah. Yeah, no, I think that's amazing. My wife and I have been able to do some international travel, and she has the same thing as you. Like, she will study and practice, and then even if she's not, I'm sure she's making tons of mistakes. But the respect that she gets from the people in those cultures, they respect the fact that she put so much time and energy into it to try to respect what it is that their culture represents. So I think that's great, and it talks a lot about who you are as a person as well, Michael, for sharing that. So. All right, last question here. If you had $100,000 you had to invest today and you couldn't put it into one of your own deals, where would you put it?
I would probably put it, I have a buddy who's raising money for a roofing roll up. I would probably put it with him for sure. The home service business is a smart move. And just generally being diversified, oil and gas is pretty smart too. I might go for that. It's a little bit riskier. I really think that, all the Cody Sanchez's of the world, though, are talking about the great wealth transfer that's coming up. And it's true. There are so many mom and pop business owners right now who don't even know that they have a ton of value in their business and they don't know how to offload that. And they want to retire and they want to move on and their kids don't want to take over the business or whatever. And so, but buying a business is so different than buying real estate because you actually have to be an operator, a business operator now. It's not just renting out apartments or using a property management company. Now you're a real business operator. So there's a huge learning curve there. So I would leverage some people that I know who are very good at running businesses and I would put money with them into buying probably home service businesses.
Awesome. Well, Michael, this has been a lot of fun. You've shared a ton of information and a ton of insights, and I really appreciate the value that you brought to our audience. Thanks so much for being on the show.
Thanks so much for having me. It was a blast.
Awesome. All right. To the audience, as always, we encourage you to continue that education journey. But more important than that, make the decision to invest in your first or into your next passive investment. Both Mike and his partner, Mike, and I believe that once you do, you'll just wish that you had started that much sooner. So thanks again for joining us again today. Be sure to join us again next Thursday for another great episode. And thanks so much for being with us on the show today. Thanks.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.